everybody, my name is Allison Ostrander and I'm the Director of Risk Tolerance here at Simpler Trading. And in today's video, I want to walk through an earnings trade idea to hold on MDT. Now, please keep in mind that any trade that you hold through an earnings announcement, especially when it's short dated, needs to be treated a bit more like a lotto earnings trade, in my opinion, meaning you have to be comfortable losing 100% of the capital risk on this trade because earnings are so unpredictable, right? Anything can happen around the announcement. All we're doing is making a good probable guess based on what the technicals see. But because earnings is such a toss of the coin and really relies on the market's emotion around the announcement, around whether or not they met targets, on their guidance, we just need to be mindful of our risk on this trade idea. And so normally on trade ideas like this, I look for a smaller amount of capital risks than I normally would on a proper open trade that I would be setting up based off of a good technical analysis. So please take that into consideration. Now, that being said, the reason why I do like this for an earnings trade idea is because of some of the technicals we see going into the announcement later this week. The first thing we have is a squeeze setting up. We have a bullish signal on the compound breakout tool. We have momentum, which was at exhaustion and has now reset back towards the zero line. So typically, seeing that as well as the true low indicator when Bollinger Bands are converging is all a good sign of some bullish move to the upside, especially with the squeeze, right? That gives it the probability of seeing a greater than anticipated move in one direction or another. On the top chart, we're in an overall bullish trend. And the particular what I like here is how narrow the Bollinger Bands are. Right? They really came together to form that pinch. And when that happens, it almost looks like a lobster claw on your chart. And so what we can anticipate outside just seeing the squeeze with it is that those Bollinger Bands will then snap and start to flare open. And the price usually chooses a direction to trade in strongly. So knowing that we have the catalyst of earnings coming up and seeing all these things with a good possibility of either one, seeing a squeeze fire and continue in this bullish direction to the upside, or two, if earnings, of course, disappoints, could end up being a counter trend squeeze that brings us back down into support levels or potentially right into a bearish trend. Not that I'm anticipating that, but that's what the power of earnings can have around an announcement. And so seeing all of this consolidation, seeing how narrow the Bollinger Bands have gotten going into this announcement, to me, it makes for a good probability that we could see a more directional and volatile move. Now, let's check that, of course, with prior earnings here. We had a little bit of a move up, but I wouldn't call this necessarily a volatile move by any means. And then it pulled back and kind of chopped. So a bit of consolidation there, actually. But on this one, we had a pretty strong gap to the downside, right? So that had a volatile move after the announcement, gave a little bit of it back on a rebound, and then ultimately moved a bit lower till finding price support around 75. Nice psychological level, so that makes sense. Here, off this announcement, we saw a strong move lower, stalled, pulled back, and then trended lower ultimately a little bit later. And on this move lower, we gapped down and then trended to the downside. And of course, very similar, right? With this one, we were in a squeeze, bearish trend signal on the compound breakout tool. Momentum had reset towards the zero line. All of this from a bearish aspect rather than bullish. And of course, the moving average is turning into a bearish trend prior to the announcement. All of that lines up quite nicely for that greater than anticipated move. So I'm not saying this was what will happen to the upside. I'm not saying it's what will happen to the downside, but I think with stronger moves off of the last 3 to 4 earnings, and given the technicals that we're seeing into the announcement, it seems like a good trade to consider one-off volatility. And so what I like to do typically is I usually actually, when it's the underlying price is a bit higher, we'll look at things like a compound butterfly strategy. For example, the combination of 2 debit broken wing butterflies to play for that potential volatile move, while of course being very mindful of my risk still and keeping it smaller due to it being a bit more of a lotto trade, right? In this case, though, with MDT, it's where its underlying price is at, it's still relatively cheap. So we could look to do this a few different ways. The first thing is the anticipated range is about 238 based off where we're trading at now. 238 roughly up or down puts us around 87 or 92. Currently that cost about $1.03 just to get into the longs. So if we think it will move at least within the anticipated range or more, this is a good trade to consider. Now the downside is earnings is Thursday morning. So usually option premiums going into the announcement, they'll hold up pretty well. So we could look to buy it now. We could wait until Wednesday going into the close to see if we get a little bit of theta decay to work in our favor to bring down the price. But that's a possibility. You could, of course, if you have a slightly higher risk tolerance, go one strike set to the inside. It adds about 50 cents to the trade idea, right? So it bumps it up by a third almost based off this cost basis. But it also brings in the move. So if you do at least get the anticipated range, there's a better probability one of these two strikes will be at least slightly in the money. And then, of course, if it's a bigger than anticipated move that Thursday and, of course, that Friday into the end of the week, then you have a really good chance of being deeper in the money to allow for that bigger profit potential overall. So there's that possibility. Now, if you like the idea of keeping these strikes higher, right, to reduce the underlying price move that you need to see, but at the same time, the capital risk seems a little too high, you could, of course, consider turning it into a spread, right? So if you do a 2-point width spread on each side, it's about a 91-cent cost basis. The max profit potential is also $1.09, so it's an even risk versus reward. The plus side to this is you bump up your strikes closer to at the money and reduce the overall cost basis. The downside is you also limit the profit potential. So if it's a really big move that's a bit more dramatic, and it brings either 88 quite nicely in the money or vice versa, the 91 strike going in the money on a bounce up, then you limit that profit potential that you might see to the upside. But those are a few trade ideas I would personally look to consider. Because like I said, I would lean towards the higher probability that this gets some sort of volatile move around the announcement. If you think that's crazy, if you think it's going to just kind of remain flat and still consolidate, you could, of course, consider an iron fly trade idea. Something like a 4-point iron fly would be about a 219 credit, 181 risk. It definitely stays within the anticipated range. I mean, the credit you receive is almost equal to that anticipated range move. So the idea is at most, if you move that, you're right around break even based off purely theta and intrinsic value. If you stay more flat, right, closer to the middle of the strike where we're trading at now, then theta decay will rip out of this trade. That premium will get crushed and you look to take a quick profit that way. So that's another way you could trade it if you want to counter what I'm looking for on the volatile side. And as always, of course, my fellow Jedis, may the trade be with you. And I look forward to talking to y'all next time. Bye. Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.